di mo'y buhay. Lupang inirang, duyan ka ng magiting, sa manlulutig, di ka pasisiil, sa dagat at bundok, sa simoy at sa langit mong buhaw. May dalagang dula at awit sa paglayang inahal, ang isap ng watawat ko'y tagumpay na nagniningning, ang bituin at araw niya kailan pa may di magdidilim. Lupa ng araw na luwalhating punta, buhay langit sa pinto. Aming ligaya na pag may mga alis na tumatay ng dahil sa'yo.
Bago pa man magsimulang tumigil ang mundo ng dahil sa pandemya, napakadami na namin ginaharap para lang magampanan ang aming tungkulin. Matagunan ang pangangailangan ng nakararami. Simula sa lungkot na dala ng pagsampa, hanggang sa iba't ibang klaseng trabaho na dinaranas namin sa araw-araw. Kalakip ang pangako ng magandang bukas. Patuloy kaming babangon para matugunan ang inyong pangangailangan. Patuloy namin iaalay ang aming oras at kakayahan para mapanatili kayong nangangiti. Patuloy kaming maglalayag sa iba't ibang dako ng mundo upang mapanatiling maayos ang inyong kalagayan. Ilan lang kami sa lipu-lipong manggagawa sa karagatan na nagnanais ng karampatang pagtrato at respeto. Para sa aming napiling larangan, sana sa araw na ito nilaan para sa amin, maisip rin kami. Nagmamahal mga marinong Pilipino.
Plaza Manila Galleria. Guests' safety and well-being is our priority. Having one of the largest pillarless ballrooms in the area, the hotel aims to provide a successful event in safe and clean environment. Whether for business or social gatherings, high level of cleanliness protocols are being adhered to by our dedicated team. As guests enter the hotel, they must undergo body temperature screening and are requested to pass through a sanitizing mat. In addition, sanitizing stations are made available at entrance and exit points of the hotel. Guests are required to fill out a health and travel declaration form prior entering the venue. To reduce physical contact, forms may be accessed and answered through a QR code. The hotel has also modified its function room capacity and setup in adherence to the safety guidelines, including a required distance between event guests. The hotel still offers its managed buffet service, but we highly recommend our exclusive plated service for a fine dining experience. Aside from their already impressive audiovisual equipment made available for guest disposal, the hotel now offers various updated and breakthrough equipment and devices to address requirements in the new normal, striking for success in events and social gatherings. Enhanced food handling measures are also being practiced. Well-thought-out menu prepared by trained kitchen staff wearing face guards, gloves, and caps are packed into bentos and are being served to event attendees and guests. Mabuhay and welcome to Crown Plaza.
Morning, everyone. I am Dante Klinkang, the Chairman and CEO of the Manila Times. Welcome to today's forum on credit literacy for financial mobility. Before we start, I'd like to greet our speakers today, Attorney Ben Joshua Baltazar, President and CEO of the Credit Information Corporation, Ms. Pia Arellano, President and CEO of the TransUnion Philippines, and Mr. Chinky Tan, who will join us later, who is a wealth coach. As you know, everyone these days is focused on economic recovery from the pandemic. And of course, getting things started may require some to access some credit. And as we've said many times in previous editorials, financial literacy is really important to not only help our fellow Filipinos preserve and grow their wealth, but also to allow them to contribute better to national development. Before we start, I'd like to thank our special partners for this event, V of VCDC, Crown Plaza Manila Galleria, Holiday Inn Manila Galleria. Also, thank you to our organizational partners, the French Chamber of Commerce and Industry in the Philippines, the British Chamber of Commerce Philippines, the Italian Chamber of Commerce in the Philippines, the Davao Chamber of Commerce and Industry Incorporated, the Financial Executives Institute of the Philippines, or FINEX, and the Management Association of the Philippines, or MAP. And last but not least, thank you also to our media partner, the Manila Times TV. Thank you also to all of those watching this event on our website and on our social media platforms. Those who will be watching this at a later event may wish to know that we will also have stories tomorrow in the print edition and digital edition of the Manila Times. So now let us get started. And allow me now to introduce our first speaker. Attorney Ben Baltazar was appointed as a public sector director and elected by the board as the president and CEO of the Credit Information Corporation last November 2020. He started in government service as a Securities Counsel 3 for the Enforcement and Investor Protection Department in the Securities and Exchange Commission. He eventually served as a technical and executive assistant to the Office of the SEC Chairperson and Commissioner, while concurrently functioning as the SEC Liaison Officer to the CIC. In 2019, he was designated as a Public Sector Director to the CIC, together with representatives from the Bangko Sentral ng Pilipinas and the Insurance Commission, and while in such capacity, chaired the CIC's Risk Committee. In 2015, he was awarded a full scholarship under the Japan IMF Scholarship Program for Asia. And in 2017, he acquired his master's degree in public policy at the international program from the University of Tokyo Graduate School of Public Policy. His fields of specialization and expertise span both enforcement and policymaking functions on such topics as security law, competition law, economic reform policy, credit information system, and financial sector regulation. With that, I'll give the screen now to Attorney Baltazar. Good morning, sir.
Good morning, Chairman Ang. Thank you. Thank you to the Manila Times. Thank you to you. Thank you to President Blanco Mercado for extending this opportunity to the Credit Information Corporation. For this morning, I will be presenting on a topic that is very much aligned with the theme of this event, which is credit literacy for financial mobility. So if I may proceed, Chairman Ang. So this morning, my presentation will be rebuilding creditworthiness and accelerating recovery with the CIC. So I'll begin my presentation by providing an overview of the credit situation in the Philippines. So generally speaking, Philippine credit awareness is not yet at a very mature level relative to our peers and even advanced countries abroad. As I will bear out in the statistics, there's still a large dependence on informal sources of credit. And this is kind of fed into this negative stigma associated with credit or utang as synonymous with financial hardship, mismanagement, and vulnerability. Which shouldn't be the case. And this is what we call the paradox of ubiquity of credit, that credit is present in everyday life. So it is kind of incompatible with this notion that it is a purely negative activity. And in fact, we believe in the CIC that to undo this stigma, we want to highlight everyone to be credit conscious and also to care for their credit. And the CIC provides a framework for that. So in a 2019 BSP Financial Inclusion Survey, so this was still pre-pandemic, it was noted that 41% of adults had loans, and that of this 41%, 54% of them had loans from informal sources, and only 3%, so there's a wide gap, had loans from formal sources. And this is not surprising because there is a perception that borrowing from formal sources is difficult. And I think that perception is actually backed up by the experience of having, to fill up so many forms, provide so many requirements, and of course, hurdling a minimum financial standing in order to be accommodated by formal lenders. So this is what I meant earlier about how loans, while ubiquitous, it says here 41% of Filipino adults have loans, but when you look at the end beneficiaries of those loans, like for example, when a student needs tuition, chances are that loan is taken on by their parent. So a household benefits from the breadwinner or the head of families taking a loan. Employees of MSMEs benefit when the business owner takes out a loan to continue the business. So definitely, loans benefit and affect everyone in the Philippines. So with respect to how these loans are utilized or what is the reason why they are actually taken out, the vast majority, 55%, are for daily needs. So this kind of highlights the element of credit as bridging a temporal gap between when your income comes in and when expenses become due. Tailing it would be business, for business purposes, 27%. So the idea here is that business owners need to take out loans to continue their business, because the nature of a business is that you earn money after you sell or render the service. But prior to that, you need financing in order to be able to buy materials, pay employees, and carry out the productive activities of your business. Of course, in the Philippines, we are well noted to value education. So that's 21%. Number 4 is medical needs. 5 and 6 would be purchase of vehicles, which are pretty big expenses relative to either a business or a household's financial activities. And of course, last is restructuring or taking out a loan to pay for a current loan. So this was taken prior to the pandemic in 2019. So I'm sure a lot of these priorities have actually been rearranged. I'm pretty sure the element of medical needs as a basis for taking out a loan has shot up. And of course, businesses now take out loans to be able to survive and bounce back, given the fact that the COVID-19 pandemic has interrupted how business and how commercial activities used to operate pre-pandemic. So unfortunately, on the topic of the effect of COVID-19 on the credit industry or credit ecosystem, and it comes to no surprise that because the main economic effect of COVID-19 is interruption of business activity, therefore interrupting, usual employment, and therefore cutting off, the regularity of income, it has increased past due and default rates because workers and even businesses which had outstanding loans even taken out prior to the pandemic but had to be paid off during the pandemic would see difficulty in being able to meet these payments because of dwindling income. So that has led to increasing past due and default rates. And of course, banks and lenders realizing that this is increasing also become more conservative in issuing new loans, which only grew by 1.9% in the fourth quarter of 2020, and thereafter it had already started declining. the only time it started picking back up was as late as August 2021, and still at a rather modest 1.1%. Now, in this pandemic as well, because of this altered behavior of lenders, we noticed that banks heavily favored giving out loans to companies at making up 72.8% of the share of loans issued in the first, I think, year of the pandemic, followed by individuals. And unfortunately, the tail end of that would only be 4.5% of MSMEs. So this is obviously an issue because we need MSMEs to be well funded and to bounce back in order for the economy to recover quickly. So the second part of my presentation is specifically to the role of the CIC and our credit bureaus, the special accessing entities. So the CIC, though it is called a corporation, is actually a government-owned and controlled corporation. So it is a channel of the state. It was created under the Credit Information Systems Act of 2008, otherwise known as the CISA. And the main mandates of the CIC would be to receive and consolidate basic credit data, which is a function of it being a public central repository of credit information. And it is not enough for us to just collect it, but we also need to feed that back into the credit system by providing the accurate credit history and financial condition of borrowers to them and to their lenders. So this is a diagram of how the CIC operates. I'll draw your attention first to the top left, which would be you, the borrower. When you borrow funds from a lender, information there is provided, such as your personal information and even the amount of the loan, the terms of the loan. You submit that to the lender, and in turn, the lender submits that to the CIC, and we consolidate that with other loans attributable to you. So if you have 3 banks, those banks will submit their data concerning you to us, and it is our job to properly match and consolidate that so that it makes up a full picture of your credit standing. And then when you take out a new loan, your new bank can pull that data to make an assessment on your credit worthiness. That pull can be direct from our database, or it can be done through our special accessing entities or credit bureaus that can provide credit scoring and other value-added services to make that information more meaningful and easier to interpret for credit decisioning purposes. So all of this is done in alignment with the law, which requires it to be mandatory in terms of collecting the borrower's data and submitting it to the CIC. And of course, access to that is voluntary and is a commercial decision on the part of an accessing entity and even you as a borrower. So specifically, our objective is to increase the overall availability of credit by making the allocation of credit more efficient, making it more cost-effective to allow lenders to avoid lending out to risky borrowers that end up defaulting and increasing the cost of credit for everyone. And of course, reducing excessive dependence on collateral, which not everyone is in possession of. So the idea here is we're pushing for reputational collateral instead of physical collateral. So just to give you an idea of how big the CIC database is now, we have over 30 million unique data subjects in our database. And of that 30 million, around 99,000 are companies. So that's the demographic side. But of course, it doesn't follow that a borrower only has one contract, especially for businesses. They have multiple loans, multiple credit contracts. So we have over 100 million loan contracts in our database. 82 million would be installment contracts, 24 million would be credit card contracts, and 1.5 million would be non-installments. And we are getting all of this information from 792 submitting entities, which are composed of banks, financing, leasing, lending companies, cooperatives, insurance companies, and even microfinance institutions. And currently, we have 131 accessing entities that actually pull this data and apply it for credit decisioning. Since 2020 into 2021, we've had over 1 million pulls of our database. So these are our SAEs, CIBI, CRIF, and TransUnion. They are the ones that access our data for the purpose of generating credit scores, ratings, and other credit and value-added products and services. So now to the final part of my presentation, the CIC credit report and access to credit. So the CIC credit report is a unique product on the market because it contains a borrower's consolidated positive and negative credit data across all lender types. So in terms of breadth, scope, and depth, the CIC credit report stands alone. So there are other credit information products on the market, but the CIC was crafted precisely to cover all manner of loan products. And since it is collected in pursuit of the law, then there is a mandatory requirement for compliance and submission. And it's not based on any commercial or voluntary arrangement to submit and collect data. So it is a very, very strong basis, and as borne by our statistics, has been effective in consolidating such massive data covering, as I mentioned earlier, over 30 million borrowers and over 100 million loan contracts. So it will naturally contain your basic personal information because that's how we are able to match your credit information to you, especially drawing from different lenders. And to clarify, this is different from a credit score. A credit score is derived from the information in your credit report and is subject to analytics, benchmarking, and proprietary processing of a credit bureau, or even if internally done by a bank or a lender. So this is a breakdown of what your credit report will contain. It has your personal data, of course, your identification, like your government IDs. As I mentioned later, we're also working on PhilSys or national ID compatibility. Of course, negative events such as defaults, delay in payments, your active account information, such as your payment history, if you're actually paying your full balance, or in the case of credit cards, if you're only paying the minimum, these are reflected in your credit report. And of course, your contract details, how much outstanding loans you have, when did you take them out, how much more balance you have for payment. So all the information necessary to determine whether or not you are a good credit risk or not a good credit risk. So just a summary of why you should get a copy of your credit report. The CIC credit report, once again, is a comprehensive summary of your credit history, the loans you've taken out, the payments, and in unfortunate cases, the non-payments or defaults or delays. And if you regularly check your CIC credit report, it guarantees that you can verify as to its accuracy and whether it's up to date. And of course, the element there of avoiding identity theft as well, because you will see the transactions that were taken out in terms of your loans and loan payments, and checking it regularly will allow you to monitor that only legitimate transactions or legitimate payments are made, or loans taken out which you yourself actually participated in. And as I mentioned earlier, this is intended to substitute for physical collateral because there's reputational collateral here. It represents to your future lender that you know how to honor your obligations and actually pay on time, and you don't over indulge or exceed your ability to cover your debt. And just to clarify as well, the CIC does not issue negative credit reports or blacklists. So through the CIC credit reporting system, borrowers with good credit standing have better chances of getting their applications for loan approved, and those with bad credit standing are likewise informed and guided towards improving the same. So one of the practical benefits of the CIC is that we were actually the agency that enforced the grace period provisions of the Bayanihan to Hilas 1 Act by directing lenders not to report past due or default incidents during the effectivity of that grace period. And as I mentioned earlier, over 1 million credit reports have been pulled from the CIC since the start of commercial access in 2020. Of course, I mentioned earlier that you should be checking your credit report to ensure that updated and accurate information are contained therein. If you see any inaccurate information or erroneous information in your credit report, all you have to do is visit our online dispute resolution process, or the ODRP, online, after you get your CIC credit report, because it will be a requirement in order for us to facilitate your concern to key in your credit report number. So just a few of our initiatives to wrap up my presentation. So last year, we rolled out our Data Quality and Usability Assessment, or the DQA. The DQA aims to ensure the adequacy, accuracy, and usability of our credit data as submitted by our submitting entities. Through this process, a lender, such as a bank, may access up to 10,000 credit reports free of charge for the purpose of generating statistics and analytics to see the quality of the CIC data and how it pertains to their business and commercial needs. This is done through their selected special accessing entity. You can go to our website for more information on this initiative. As I mentioned earlier, we are working with a technical working group with an Asian Development Bank and also the Philippine Statistics Authority to ensure proper compatibility with the National ID, or the PhilSys. So this is definitely something that will get off the ground early this year. And lastly, our newest initiative would be what we would call our D2C through AE, or direct to consumer through accessing entities initiative. We would like to extend the public the convenience of being able to access their credit reports with or without score through their preferred bank or lending institution, which they currently have a commercial relationship with. This program is intended to fulfill the CIC's mandate to provide Filipinos with immediate and convenient access to their credit information, especially during this pandemic. You don't have to go to the CIC office. You don't have to submit voluminous documents for KYC, because if you approach your current bank who will be participating in our pilot rollout, your information is already with them. Your know your customer documents are already in their possession. So we expect an expedited screening process. So that is it for my presentation. I look forward to everyone's questions. And once again, I thank the Manila Times for extending this opportunity to the Credit Information Corporation to speak on its recent reforms and increase awareness on credit literacy for financial mobility. Thank you.
Thank you, Attorney Baltazar. And at this point, may I bring in my co-moderator this morning, my fellow editorial writer, Ben Kritz. Ben, I give you the privilege of asking the first questions. Go ahead.
Oh, yeah, Attorney Ben, thank you for your presentation. I think this is something, I think honestly, a lot of people have no idea what the CIC is or what it does, and I find it rather innovative, so I appreciate your time here. I'm going to start with a question from the tail end of your presentation. You said you're working on the D2C program through the banks. How's that? When can we expect that? You know, how far along are you? Is that going to be rolled out fairly soon?
Thanks for your question, Ben. Actually, we're targeting deployment, meaning to say the ability of a consumer to go to their preferred bank and securing their credit report as early as Q1. So I think we're finalizing the guidelines this month of February. So the goal is really by March. So as early as March, the public can already approach participating banks and lenders and secure the credit report through those means. And then if we find it to be a success, we'll be able to accelerate and roll it out for other participants throughout the year. So we'll probably approach it by batch, but the goal is really by the end of this year that majority of our credit reports can be accessed through majority of the big banks and largest lending institutions that cater to the widest number of clients.
Okay, all right. Now I have another question. It might be a little stickier, but the credit report is more or less neutral, correct? You don't make you just list the data on there, good or bad. You don't make a judgment based on the credit report. Your objective is to make that as complete as possible. for the benefit of lenders or consumers that are looking at it. Now, when it comes to the credit scoring, that is the job of your partners. And what I'm wondering are there standards for this score? Now, that's business on their part, but are there standards for, how scores should be derived from the CIC credit report? Because as you know, in the U.S., we live and die on our credit score, and that can really ruin somebody, or on the other hand, it can be a great benefit. And there are several credit agencies, and scores are all done a little bit differently. So in the law, or in your standards, are there some standards to those credit scoring agencies, some guidelines for them for setting up their scores, so that there's some consistency among them?
Yeah, that's a great question, Ben. Currently, there are no hard standards provided with respect to credit scoring. However, under the CISA, it is a requirement that if you are turned down for a loan and a credit score was used, the lender is obligated to inform you why you weren't granted that loan. So it could be the case wherein they explain that they had a threshold score and that your score wasn't able to exceed that. But I'm glad you pointed out this gap, because as early as Q1 of last year, the CIC participated in a technical working group before the House of Representatives or Congress for a draft bill on alternative data and credit scoring. And one of the hallmarks of that draft law would be to eliminate discriminatory criteria when forming credit scoring. So definitely it's a work in progress right now. The market is still being allowed to kind of settle as to what are acceptable metrics of credit scoring. But definitely soon we expect legislation to fill this gap, should it go into the level of requiring legislative policy intervention. But you know what? That's a great concern that you brought up, and thankfully we already have a good start to addressing those concerns.
Okay, Clink, you wanna ask something?
Yeah, well, I was hoping you'd ask something about the subject matter you wrote about in one of your editorials, which is about giving out loans to SMEs. In an editorial, Ben was making the point that there's an existing law that mandates banks to release loans to SMEs, except that these facilities are not executed for some reason or another. And I was wondering if the CIC is working with some financial institutions, perhaps to reassure them, right, or maybe lessen the paperwork or whatever, so that more of that facility can actually be given out as loans to small and medium-sized enterprises.
Yeah, that's a great point, Chairman Ang. So definitely, as early as last year, we've already flagged MSMEs as a critical point of concern for loans. And generally, I think one of the advantages we have, and as mentioned by Ben, is that we're not as well known as we ought to be. And one of our priorities right now is to establish a solid beachhead with MSE borrowers and lenders that cater to MSMEs to use some credit information with us as a way to expedite and ease the credit decisioning process for MSMEs. So as we all know, MSMEs employ the most number of Filipinos.
96%. Yeah. Well,
they have such a
60% of the manpower. Yeah.
Yeah. So definitely the key to being able to bounce back is to ensure that MSMEs can recover faster even than their counterparts in the corporate sector. So one of our specific projects is that we're looking into this trend abroad of supply chain and invoice financing. So one of our submitting entities is a well-known player in the region, and we're fast-tracking their ability to be able to pull CIC credit reports. One of our SAEs, CRIF Philippines, has a proposal on how to use credit reports for some sort of internal marketplace where they match suppliers and buyers, and using the CIC credit report as a way to expedite the ability to match them based on size and scale. And of course, lastly, we are a member of the MSME Development Council, or MSMED, which is a body that is led by the DTI. Specifically, we work on access to finance, and we are working on shoring up our analytics and metrics to ensure that we can monitor the behavior of MSME loans, trying to catch if we should be concerned about the default rates, and then even parsing it by geography or by business sector. So these are things that are in the pipeline right now, and we hope to deliver on them sooner than later this year.
Yeah. So does that mean that, if a small or medium-sized company has credit information with CIC, would they be able to say use that as a substitute to some of the bank requirements? Say, look, we're registered. Here's our information. Here's our data. Right? Would that make it easier for them to deal with banks eventually?
Yeah, most definitely, Mr. Ang, because what that does is it lowers the cost of having to take out a loan. Instead of, let's say, a business having to target, I need to own X amount of property with this valuation before my bank will release a loan to me. All they have to show is what they have done historically, and that allows you to optimize your business decisions. Anecdotally, we've had like a situation where we had a female entrepreneur, and she mentioned that she was able to approach one of the car financing or auto financing companies in the Philippines, one of our heaviest users, and she was able to secure a loan for a vehicle for her business without even having to show collateral. She just had to turn over her CIC credit report. So we hope that would be the standard case moving forward.
Fantastic.
Instead of us having to be bogged down with getting collateral and then of course, the cost associated with collateral such as doc stamps and all of these things. So, aligned with the government's thrust of easing the way we do business in the Philippines, CIC is helping out in that regard.
That's fantastic. Just last question, Attorney Baltazar, and this has to do with credit cards. My expectation when we started looking at the CIC years before, that somehow, with credit information available, that the cost of the monthly charges charged by credit cards would come down. As you know, that it's still, it's probably lower from a couple of decades ago, but still quite high, with probably northwards of 1.5% per month. You're looking at an effective rate of, much higher, but people don't ask for the effective annual rate, right? So they end up in trouble. But do you think that, are you working with credit card companies maybe to have more information about credit card holders, and will that result in lower finance charges in the future? How soon can we see that?
That's a very timely question, Mr. Ang, because we actually had a meeting with the Credit Card Association of the Philippines last Thursday. And that's a great time to have a meeting, to start of the year, to re-engage with them. As you would know, the benefits of credit reporting with respect to the cost or lowering the cost of credit is pushed on the access side. So as I mentioned, we've only breached 1 million access over the past 2 years. That's a drop in the bucket relative to the total loan activity in the country. So we want to accelerate that at least threefold for this year alone. And we are hoping that credit cards will be one of the first movers in terms of accessing our data in sufficient volume to match their commercial activities. And the hope there is they will pass on the savings to their borrowers because they're able to avoid those credit risks that, as we know, if they default, then as going concerns, they have to be able to allocate those losses elsewhere. So definitely credit cards will be our priority as well in terms of access and even their data submissions this year.
Well, thank you. That will be welcome. I have so many other questions, but I think we have to move on. But if you can say later on, I think maybe we can circle back when we do another round of Q&A with the other speakers. So, Attorney Balazar, thank you very much. If you can, I don't want to impose on you, but if you can stick around, we'd like to have the opportunity to ask you some more questions when we hear from the others. Ben, can I turn back the screen to you now and introduce our next guest?
Yeah, I'd be happy to. There we go. Okay. All right, our next guest is Pia Arellano, who is the president and CEO of TransUnion Philippines, which is one of the SAEs that Attorney Ben mentioned in his talk, one of the partners of the CIC. She's a seasoned financial services leader with 24 years of industry experience and is responsible for driving the TransUnion business and delivering innovative information solutions for the country. She is instrumental in solidifying TransUnion's position as a leading comprehensive private credit bureau and in establishing the company as a risk management and information solutions partner, helping businesses make informed decisions and supporting consumers in accessing financial products and services that ultimately lead to a higher quality of life. An accomplished professional with a solid track record in delivering profits and growth for companies, prior to joining TransUnion, she was most recently served as head of sales at Visa, where she was responsible for business development in the Philippines and Guam. Before Visa, she served as vice president for retail banking and China Trust Banking Corporation and as a business development manager for Western Union. She started her career in Citibank and was responsible for the launch of Ready Credit in the Philippines. She has a Bachelor of Science degree in economics from the University of Philippines, where she was a cum laude graduate, and she's also studied European business at the ESSCA University in France. Ms. Pia, welcome. Good morning.
Good morning. Thank you so much for that introduction, and thank you to the Manila Times for inviting us to this forum. TransUnion is a global information solutions company founded 50 years ago in the US and is present in more than 40 countries worldwide. Information for good is our mission, and the responsible stewardship of data is part of our DNA. In 2011, TransUnion partnered in the Philippines with the 5 largest banks, launching the country's first comprehensive private credit bureau. Our ultimate goal is to provide financial responsibility and inclusion, strengthening our financial system by providing data to our banks and lenders so that they can say yes to more Filipinos in need of credit. Today, our data is helping lenders extend new to credit data to approximately 100,000 Filipinos every month. Despite these significant gains, however, you can see, as the slides here show, that 71% of adult Filipinos are still credit invisible. According to the BSP Financial Inclusion Survey, over 50 million Filipinos remain unbanked with no access to formal credit. Almost half of this unbanked population, as Attorney Ben also mentioned, borrows money from non-banking sources, mostly coming from family and friends, as they likely are rejected today, given that they do not have a strong, reliable credit score to evaluate and approve their loans. Because credit provides greater opportunities for Filipinos, the BSP targets 70% financial inclusion by 2023, which will start from a transactional account. Next slide, please. More than 50% of young adults believe that credit is important, but only 30% believe that they have sufficient access to it. So TransUnion conducted a Consumer Pulse survey last quarter of 2021. And there we saw that over 50% of millennials and Gen Z believe that access to credit and lending is important to achieve their financial goals. Majority, however, of this segment are new to credit. They likewise have the lowest access to credit despite their need. Next slide. New to credit consumers are restrained due to the lack of traditional credit information available on them. So formal credit data, as you can see in the left chart, such as credit history, personal information, income have been the reliable sources for lenders to evaluate creditworthiness of these loan applicants. Traditional credit scoring methods have also utilized these attributes to determine whether an application should be approved or rejected. On the other hand, for the unbanked and new-to-credit customers, limited data and insights are available, which really leads to more rejection of their applications. Next slide, please. An NTC consumer's risk profile could be determined by more than just traditional credit data. So that's the good news. The innovation of using alternative data creates a more holistic picture on consumers and enables these non-formal credit data to be used to assess a customer's creditworthiness. Some examples of these credit data include mobile telco data, bills payments, social media transactions, and patterns, and so on. So as you can see, we have to start exploring alternative data sources as proxies for formal credit data. And that is where the power really begins. Next slide, please. The use of mobile phone data really enables innovative and more accurate prediction of every Filipino consumer's creditworthiness. We at TransUnion have tested various alternative data sources, and we have identified that repayments and telco behavioral data have proven to show the highest predictive power. In the Philippines context, that's very important because majority of our Filipino adults do own a mobile phone. Some even have two phones. So mobile telco data really is the most logical alternative data source, given its predictive strength and capability to score almost every Filipino adult in the nation. Next slide. So what if we combine the strength of trended bureau data or traditional data with alternative data? So that's where the magic begins, right? So imagine the power the lenders will have if they now have access to formal trended credit data, which CIC and TransUnion provide, and alternative data and scores. Based on our testing, the integration of telco data, such as mobile reloads, payments, usage transactions, location and device information, can really help uplift creditworthiness of an individual in this new-to-credit segment. Combining this with the formal trended data makes it even more powerful, and lenders will be able to derive maximum holistic insight on every consumer's creditworthiness. So let me share with you our newest solution. We call it Credit Vision Link. And here we combine the power of traditional with the alternative data. Adrian?
Today, over 50 million adult Filipinos don't have access to financial services. They lack the credit behaviors traditionally used to assess creditworthiness. To bridge the gap, TransUnion taps into alternative data, evaluating broader behaviors to reveal their ability and willingness to pay debts. We find that data here. Nearly every Filipino adult uses a mobile phone to access the digital economy. Mobile and data usage provides information about financial transactions and fund management. We combine and consider all these factors to create an innovative credit scoring solution for the new economy. Introducing Credit Vision Link, the only credit risk evaluation tool to accurately score 100% of the population using traditional and alternative credit data. We want to help responsible lenders safely say yes more often and cater to new markets, allowing more verified consumers to access the financial goods and services they need and deserve. Discover how you can more accurately score 50 million credit invisible consumers at www.transunion.ph.
Credit Vision Link is the only one-stop shop credit scoring solution in the market today. And based on our backtesting, lenders will be able to score nearly all Filipino adults who own mobile phones. Based on TransUnion's validation, the Credit Vision Link score has the potential to lift score accuracy by at least 2x versus just using your traditional formal scorecards, and enables credit eligibility and approval of 60% of new-to-credit and thin file segments while keeping their bad and loss rates at bay below 5%. Slide. Once a first loan is granted, limitless credit opportunities can then be enjoyed by Filipino consumers because TransUnion continues to equip banks and lenders with insights and data to manage customers throughout their credit lifecycle. Last slide. Credit means opportunity in the new normal. So we truly need to educate Filipinos to protect and manage their finances. Beyond equipping lenders with the right tools, TransUnion also provides education via enabling customers to directly access their credit report and score. So you simply have to go to transunion.ph to be able to request for your score and report. By getting access to credit, Filipinos can achieve their dreams in the new digital normal. And whether it's a dream home, it's their dream car, or get access to funds to start up a new business. Really, the opportunities are endless and limitless. In closing, again, I just want to reinforce our information for good mantra. And despite the continued uncertainty that still looms ahead, given the pandemic, we remain very hopeful that if businesses and consumers really just leverage on the power of data together, we can drive financial inclusion together with and propagate inclusive growth with that one singular vision in mind that not one Filipino gets left behind. Thank you.
Thank you very much, Ms. Aureliano. Very interesting. If you don't mind, Ben, I'll go ahead this time. I just have a series of stupid questions in mind. I'd like to.
No such thing as a stupid question.
Oh, but I'm really excited about TransUnion. Just hearing about you. And here's my first stupid question. Does that mean if I'm a consumer, if I'm a borrower, I go to you? Does that save me or potentially save me from paying a higher interest rate when I get a loan from a bank because I have a TransUnion credit report? I mean, that's sorry, very basic, but
no worries at all.
I'm very excited. Yeah.
Okay, so basically, sir, we are a data solutions company. So what we do is we are the ones who provide data to the banks and to the lenders, right?
Okay.
So all the banks and the lenders pretty much utilize our TransUnion data to assess creditworthiness. But yes, that is a great point because we also, part of our solution is like CIC, the credit report, which is consider it like your report card.
Right.
And we also create credit scores per customer, right? So with these tools, banks can now extend credit. And again, depending on your report card and your score, they can give you better rates.
Right. That's fantastic. Given the propensity of Filipinos to ask for loans, that's a fantastic service. I'm just wondering, what is the nature of your collaboration or cooperation with CIC? I mean, I guess particularly, I'm not sure if you heard the questions earlier about SMEs, right? I mean, because that's something that we need to get going to recover from economic blow from the pandemic.
So we are a partner of CIC. CIC is an invaluable data source for TransUnion. We are, in fact, I think the first SAE accredited by CIC. So they're definitely a partner. We collaborate with them on a variety of fronts, not just in the B2B aspect, where we give, again, solutions to our banks, but also in giving credit reports to customers. So it's a very close partnership.
Right. You said that you work with, the 5 biggest banks. Is there initiatives to maybe to expand that, maybe even down to, I don't know, credit unions or maybe rural banks?
Yes. That's a great question. Thank you.
Yeah.
Thank you for asking that. So the 5 biggest banks in the Philippines are our stakeholders. So they have a 20% share in TransUnion Philippines.
I see.
However, we do cover pretty much all the Unibanks. And in fact, we also have a partnership and collaboration with RBAP. And also the co-ops. Recently, last year, we signed a partnership with DigiCo-op. So it really extends across the nation, not just limited, of course, to our 5 stakeholders.
That's fantastic. So, eventually you'll be reaching out to the remotest areas. RBAP, of course, is the Rural Bankers Association of the Philippines.
That's right.
That's right. Okay. Fantastic. Ben, Do you want to jump in here because I'm just too excited to ask some more
Yeah,
questions?
well, and I think we were warned ahead of time that we have a little time, so we can get some good questions in here. I was very interested in the part of your presentation about the use of non-traditional data, because that's been something that's needed to happen for a long time. So your Credit Vision Link product, is that live now? Are you using that right now? That's ready to go and people can.
It is. We launched it last November, and a good number of our biggest banks are actually already using it. So yes, and as mentioned, it's mobile telco data is just a start. That's why we call it Link, because the plan is to add on other proxy or alternative forms of data, like other utility bills, case in point, Visa, MasterCard debit transactions, perhaps even. So the plan is to really continuously expand on this alternative data sources and couple that with the traditional payment data.
Okay, this is a question that I had actually meant to ask Attorney Ben, but I'll ask you because I think you probably could answer it.
Sure.
He had gone in his presentation. He had mentioned the different potential lending institutions that are connected there. Does this include like the online lenders?
Oh,
The ones that are given the 1,000 peso loads if you upload a picture of your ID, that has grown in popularity quite a lot during a pandemic. They found a good market, and I was just curious how much that was figuring into both what the CIC does and then the information that you use for credit scoring. Because
yeah. Again, we aggregate data from all our lender partners, right? And definitely the fintech lenders or these online lenders are showing lots of promise and potential. In fact, their contribution to the total lending in general, based on our data, has really been increasing. I guess we're also aware that apart from these online lenders, there are also digital banks. I think there have been five to six licenses that have been issued. So definitely online lending is a space to watch, contributing a lot, especially when it comes to the new to credit space.
does that data get captured in the
Yes,
the telco data?
absolutely. So all the data, be it from a big unibank or a rural bank or a co-op or a fintech lender, all this data is ingested by our database, and then we use this to calculate, to create the score and create the credit report at the end of the day. So all of it is ingested.
So I guess a good reminder to the average person would be to if you borrow from one of these fintechs, you should probably take care of that loan because it's going to turn up somewhere.
Yeah.
I'm gonna ask you kind of the same question I asked before. As far as the scoring, to what I realize that your whatever your formula is for scoring is proprietary kind of thing. That's your business. But to what extent do you collaborate or cooperate with other credit scoring institutions so that you are, even if you have your own little nuances, you're still all kind of working consistently? Because this is something that happens to people back home. There's three. You'll have
variances,
scores from 2 or 3 credit bureaus,
right?
And there will be a big difference between 2 of them. So how do you work that out?
Sure.
That maybe your score for somebody is a little bit better than the next agency's, but you're at least in the same ballpark.
Yeah, that's a great question, and again, happy to enlighten everyone about how it's actually done. Right. I personally am not privy to the secret sauce, if you will. So I don't really know the algorithms that go behind the calculation of that actual credit score. However, there is in general a broad range of criteria which does factor into the computation of a credit score. It's really very basic. Number one would be your credit payment history, right? Do you pay on time? Do you pay in full? Do you pay partial? Number two, the length of your credit history. How long have you had credit, right? Are you new to credit, or have you had it for 20 years already? Number three would be utilization rate. How much of your actual credit do you use? Have you maxed it out? Number four would be the different types of credit that you have. Do you just have one type of credit, say a credit card, or would you have a variety, which actually again shows how responsible you are in terms of managing credit? And then lastly, new credit. Have you been applying for loans or credits every single month? So again, that's an indicator for some sort of distress. So all these factors in general play into the calculation of that final credit score.
Okay. Clint, you want to jump in here?
Yeah, well, maybe if we can bring back Attorney Baltazar, I'd like to ask him and Mr. Arellano some common questions. And the first is, of course, people are talking about the elections already, which is a few months away. And, I was just wondering, in terms of public policy, what should be discussed? Because, there's so many trivial things being talked about in the, the presidential interviews and other candidates. What are the more important things from a credit viewpoint? That should be part of the discussion. What would you like for either this government or the next government, so to improve our systems for providing credit? Maybe let's start with Attorney Baltazar, then Ms. Arellano.
Thank you for that question, Klink. So from the CIC, we would just hope for the whoever wins or the next administration to continue on the gains of the CIC and provide us with the same level or even higher level of support in terms of national assistance. Of course, we would also like for the future administration to put an emphasis on the use of credit to, credit assistance programs. I believe I was asked about that by one of our legislators during our budget hearings about how the CIC can help and assist monitoring whether, assisted credit is actually going to their end users and whether it's achieving the target goals behind why those programs are actually implemented. So that's something we're also looking into. But I think at the end of the day, we do have a mandate under the law. And, for the next administration, we just wish for that administration to continue the support. And if enhancements or improvements are needed to be done in the CISA, then we look forward to cooperating with our legislators to making the necessary adjustments to the SIC.
Okay, I think we have some work to do on also educating our candidates on financial literacy as well. But Ms. Arellano, kidding aside, your point of view, what kind of policies would you like to see, from this government and maybe the next government?
Right. So for me, it's all about data and how can we leverage more on the power of data. Number one, I guess, would be our national ID. If we can just accelerate that initiative, wow, that will really open doors and really get us on that road to recovery. That's number one, most important. And then number two, I guess my ask, if you will, would be just automation, better automation across our public sector and our NGOs. Again, there's numerous data that can be captured there from our public sector and our different government agencies. But again, because of lack of automation, it makes it very difficult for us to absorb and ingest this, right? So if we can, just accelerate that automation piece a bit more as well, that would really be a great help.
Yeah, again, questions for the both of you. I was wondering if you have any practical advice for people who want to build up their credit history. You have a lot of cash, and it doesn't really help your credit history if you pay everything in cash, right? You don't accumulate that record, I suppose, or maybe that's a wrong assumption. Maybe we can start this time with Ms. Arellano. Just some practical advice to people, right, on how they can maybe make it easier for them when they go to any financial institution. What should they do now?
Right, right. So again, first thing I want to debunk is that credit is not bad. Credit is actually good. It can open doors to opportunity, right? Again, the sad reality also mentioned by Ben is that a lot of our Filipinos usually resort to the black market, and there they're exposed to usurious rates, which again is very, very sad. So the important thing is to really get them into the formal credit economy. Once they are in, and again, hopefully, given alternative score options, which will now allow us to be able to score every single Filipino, right? Just two practical tips, which will definitely make a huge dent in improving your credit score. Number one, pay your bills on time. It's all about paying on time. That usually has a big weight in terms of crafting that final score. And secondly, you don't have to pay your bills in full if you don't have the means. You can pay for it partially, but pay on time. That's usually the most basic tips I give.
Okay, interesting. Mr. Attorney Baltazar, you have some practical advice?
Well, the thing about the CIC is that we just function as a mirror. So the usual conventional advice on, not spending beyond your means, prioritizing your expenses. So these things still apply, but the difference is now they're on record with us. So one of the things people have to be conscious of is really the idea that big or small, if you have a loan, because I mentioned the CIC's coverage includes microfinance and even cooperatives, big or small, everyone should be more conscious right now that their information is being reported to the CIC. And that's a good thing, because what happens there is that everyone's expectations are rationalized, meaning to say, if you're a good payer, big or small, you are rewarded because that is reflected in our database. If you're kind of considering doing something risky or continuing bad payment practices, then the market will also know about that and act towards you fairly. So the idea here really is more of increasing consciousness to everyone, all borrowers from all walks of life, that if your credit information is now on record, then we have to treat it with care and with respect. And at the end of the day, it really is intended to benefit everyone when everyone is more credit conscious. So that's really the advice I have to give from the CIC.
Interesting. I have a stupid question for you, Attorney Baltazar. If just myself as a regular consumer, would I be able to access my credit data from CIC somewhere, or what do I have to use just to check what's on my CIC record?
Yeah. Currently, the easiest way to access your credit report is through one of our SAEs, which is CIBI. They have a MyScore app. But don't worry, we've already given approvals for TransUnion and CRIF to roll out their direct-to-consumer programs as well. I think their launch is also expected to be in Q1. But if we're talking about like what can you do right now, you can apply for your credit report with, I think, Score from CIBI. It's, I think, at quite an affordable price, but you can do it purely online. But you have to set the schedule and appointment for KYC, which is exactly why we're pursuing that D2C through AE Thrust to expedite that process. But that's what you can do now. But as I said, we're trying to roll out more channels to make it more convenient for the public to get their credit report. You don't have to show up in our building. It's very, very small, not great for social distancing. So we're also making these adaptations in light of the pandemic.
Yeah, it's a totally new world these days after pandemic. Ben, I think we need to move along. Would you? Thank you, Attorney Baltazar.
I have a couple other questions, so
Go ahead.
that the both of you can stick around, and we'll get to them after our next speaker.
Happy to.
I think it's time for us to go along. So if we're ready, I'll go ahead and introduce our next speaker. Okay, he's familiar to a lot of people. Ferdinand Chinky Tan, probably only his mother calls him Ferdinand. He was an actor and comedian both on television and the movies before he became a best-selling author, radio host, and sought-after speaker. He is a native of Tondo, and is of Chinese descent. So Happy New Year. And the eldest of three children. He attended Manila Chinese School, Hope Christian High School, and the Philippine School Business Administration for his education. Due to his family's big losses in business, he started to realize the importance of perseverance and hard work at a very young age. The family crisis brought him to Divisoria, where he bought anything that he could peddle to classmates and friends, including toilet paper, from which he made some profits. It was this part of his life where he developed his business acumen. In the course of his early start as a budding entrepreneur and the different challenges it presented, his vision in life was crystallized to be a very successful entrepreneur who will be at the providing end of earning opportunities for people who need them. The succeeding part of Chinky's life witnessed the realization of this vision. He embarked on various ventures where he always figured out ways to reap good returns. His firm belief is to just help enough people get what they want, and you will also get what you want in life. He speaks from the heart and has spoken before retirees, executives, private as well as government employees, students, church leaders, and even out-of-school youth. He has helped and coached over 50 people to become millionaires in their businesses. His topics of expertise include how to get out of debt, 6 steps to financial freedom, be the best that you can be, 6 Ds of success, how to reach your maximum potential, how to speak effectively in public, how to overcome fear of public speaking, 6 steps to improve self-image, develop a winning mindset, how to deal with change, and power of entrepreneurship, among others. He's one of the most respected Filipino motivational speakers and best-selling authors. He is known for his sincerity and deep sense of empathy as he speaks on topics as varied as financial management, self-confidence, and leadership development. Also known as Mr. Chink Positive, he has his own show on 92.3 News FM, and he is also one of the hosts of Sapul Socinco Para Lang, co-host is 700 Club, as well as a resource speaker of Go Negocio. His 3 best-selling books, Till Debt Do Us Part, Practical Steps to Financial Freedom, For Richer and For Poorer, and Rich God, Poor God, are available at all branches of National Bookstore, Fully Booked, and Philippine Christian bookstores nationwide. Would you please welcome Mr. Chinky Tan? Sir.
Thank you very much, Ben, at the same time, Sir Clink. I think that was a very generous introduction. As a matter of fact, I have a short message. I think the introduction is longer than my talk already. Thank you very much again. And I'd just like to greet our fellow kababayan and Filipinos who are here right now and fellow Filipino-Chinese. Kong Si Fat Sai. Okay, tomorrow is Chinese New Year. And today, I would like to discuss about the topic of wealth quadrant. Because ultimately, all our goal is to be able to retire comfortably. And the mere fact that the only way that you can retire comfortably if you are able to achieve these 4 things. So I would like to request everyone who's watching this live right now to take mental notes, or if not, take screenshot of these slides. These are the 4 things that you need to achieve in order for you to be able to achieve true wealth. Number 1 is what we call you should learn how to earn money. That's the first aspect. Because even though that you want to become wealthy, in order to build your dreams, you need money to buy a house, to buy a car. So first things first, learn how to create money. Second, learn how to manage money. Even though you're good in creation, but if you're poor in managing your money, you know what will happen? You will not have enough. And third, even though you're good in earning and creating and managing, but if you're poor on step number 3, and the third quadrant is growing your money, you will not also be able to achieve financial independence, because the moment you stop working, you stop earning, but you don't stop spending. That's the reason why you need to learn how to make money work for you instead of you working for money. And last but not least, even if you're good in creation, in managing, in growing your money, but if you're poor in protecting your money, you know what will happen? One critical illness can wipe out your entire savings. That's the reason why these are the 4 things that you need to what? Fulfill. Whether you are starting, you are already starting with, probably you're just a single person, you're married, or you're about to retire. These are the 4 things that you need to achieve So let's go and focus first on earn. Why should you earn? Because if you do not learn how to make money, you will be living forever in lack. How many times whenever people will come to me and ask me, Chinky, what do I need to do in order for me to save more? Okay, I always tell people instead, aside from decreasing your expenses and managing your finance, you should learn also how to create your money, because you can only save up to a certain point in your life. So what is the goal in terms of us to create money? If there's one goal that I would like to share with you this 2022, you and I should learn how to create multiple sources of income. When I say multiple sources of income, can you please bring me out of the slide? If there's one thing that this COVID really taught us, is this. Ben, Clint, and Shielo, and everyone who's here right now inside this room, and people who's watching on Facebook, is that you and I cannot afford to have only one source of income. If you have only one source of income, you know what I'm trying to say. Definitely, the moment your income slows down, your industry slows down, what will happen? Definitely, you'll be in lack. Probably just to enlighten you right now, just name me one billionaire here in the Philippines that has only one source of income, one business. Meron ba? Wala. Majority of them have multiple sources of income. Not only multiple sources of income, but they are in different industries. Again, that's one rule in business. We always hear this quote, never put your eggs in one basket. I'm sure you've heard of that, especially when it comes to investment. Learn how to diversify. But actually, this principle of diversification doesn't only first apply in terms of investment, but this must first be applied in cash flow, your sources of income. Because you have only one source of income, the moment your income stops, what will happen? Again, you will have problem. So what are the alternatives right now that we can get into in order to create multiple sources of income? The first default definitely is to seek for employment, JOB. And if you have a job right now, congratulations, because not everyone has the luxury of earning money right now because of the COVID, the pandemic. That's number one. Number two, aside from employment, you can go into sales. But make sure before you do moonlighting, or probably you want to create a second source of income, there must be no source of conflict with your present income. The goal is to create more, is not to remove the original income. Again, when you talk about sales, you can go to real estate, financial services, direct selling. You can cook the favorite food, favorite pastries that you can market. And the third is what? You can get into business. Once you start earning profit, the moment you earn money, you save money, and the goal for the money is not only for you to save, for you to multiply. And the best way to multiply your money is through opening your business, an online selling business right now, or if not, you can open a brick and mortar. And then after that, probably can also sell your services. Chinky, I'm not a business person. You can sell your services like skills and talents, work from home, digital marketing, online selling, or if not, you can do editing, video graphics, or if not, copywriting. And last but not the least, you can also get into franchising. Franchising, you can sell online or what we call as offline. So the first thing that you and I need to create is create money. Once you learn how to create money, the second quadrant that we need to protect and learn and how to master is learn how to manage your money. Why should you learn how to manage your money? At the end of the day, it's not how much money you make, but it's how much money you keep. Even though if you make 100,000 a month, but if your lifestyle it's 120,000 a month, you'll be living off in debt. You will never have enough. How many times people complain that they're not making enough? Narinig nyo din kasabihan, liit kasi ng sweldo ko maliit lang. Well, as a matter of fact, let me challenge you. Natandaan nyo ba yung first salary nyo, your first income? Was it small or was it big? First income. Small, maliit, di ba? Himala, nung maliit ang sweldo na pagkakasya, di ba, nung lumaki ng sweldo, nagkulang na, nagkautang pa. Do you agree? So the problem is not the income, the problem is your attitude and your mindset and your behavior in handling your income. So what should we do right now in order for us to manage it well? 3 things that you need to learn and master. Number 1, you should learn how to save. Number 2, budget. And number 3, how to get out of bad debt. Okay? So again, saving money, budgeting money, and being debt-free. And then what's the goal of savings? The first goal of saving is for you to save up, not for your travel, not for your house, not for your car, but to save up for your emergency fund. When you say emergency fund, just in case something happens to you, your income slows down, probably you lose your job or lost your job, you have at least 6 to 12 months. Again, let me repeat, 6 to 12 months of your living expense. Why do you need 6 to 12 months? Just in case you lose your job, you have 6 months of time, leisure time that you can recover. And I do believe within 6 months' time, it will be more than enough for you to be able to recover, find a new job, start a new career, or start a new business. You just need to learn how to imagine this thing. Like, for example, the moment you lose your job, you don't have an emergency fund, you'll be worrying about your bills, you will be worrying about your debt, and on top of that, you'll be worrying if you can find a new job or new source of income. It's just like being pressed with so much pressure and stress. But if you have an emergency fund, you'll be able to think clearly. Number 2, set a spending budget. Just like what the other speakers made mention a moment ago, you cannot spend the money that you do not have. So if you're making 25,000 to 50,000 a month, 50,000, it means say that you cannot spend more than 50. The moment you spend more than 50, you'll be already in debt. And number 3, be free from bad debt. And let me qualify, there are 2 types of debt. Number 1 is good and number 2 is bad. When you talk about good debt, you borrowed money in order for you to increase your revenue. You borrowed money to start your enterprise or to expand your business. And then when you borrow money to pay off your bills, to pay off probably anything that will not give you revenue, that's considered as bad debt. And the third, after you learn already how to create money, handle your money, it's time for us to grow our money. Why? Why should you learn how to grow your money? Because the moment you stop working, you stop earning, but the problem is you and I don't stop spending. So in other words, ladies and gentlemen, how many times we've witnessed some people, the moment they retired broke and poor. Why? Because they created money, they learned how to manage, but they failed to what? To grow and learn how to invest. So when you talk about growing your money, you and I should learn how to master investing. What do we need to invest on? Probably some of the funds that you can look up to right now is UITF, stock market, mutual fund, MP2, property, what do you call a cryptocurrency, one of the latest trends right now in terms of investment. And maybe some of you are asking, Chinky, where should I invest my money? I will not tell you where exactly. I just gave you an idea because different strokes for different folks. But if there's one thing that I would like to share with you about investment is this. What are the things that you should avoid doing in investment if you want really to make profit? Number 1, never invest in something that you do not understand, no matter how profitable it may be. Just like driving a car, if you don't know how to drive a car, chances are you will damage the car and you will bring damage to property and to life. And likewise, if you don't know how to invest and you get into it for the sake of earning money, you will lose money, guaranteed. Always remember also the second thing, the higher the interest, the higher the risk. Again, the higher the interest, the higher the risk. Please be careful of any get-rich-quick scheme that you can invest your money and you can double and triple your money in just 1 week or 2 weeks' time. The moment anyone makes you that offer, make sure you stay away from them with a 10-foot pole. So what is the goal in terms of growing your money? The ultimate goal in order for us to retire comfortably is to be able to transfer our income slowly from active income to passive income. Let me repeat. Transfer your income from active income to passive income. When you talk about active income, can you please bring me out of the slide? It means saying man at work. The moment you stop, you work, you earn money. Okay? On passive income, even if you stop working, you continually to generate income. This is what we call as money at work. Well, if we ask the crowd right now, which is a better option, definitely majority of you will say it's passive income. That's the reason why my challenge to you today is this. If your income 100% is on the active income, we have to slowly transfer from active to passive. 80, 90, 10, 80, 20, 70, 30, 60, 40, 50, 50, 60, 40, 70, 30, 80, 20, 90, 10. The moment you transfer your income slowly from active to passive, the earlier you can retire. So, the second good thing probably that this COVID really taught us on the first 3 months of the lockdown was already a foretaste of our retirement life. On the first 3 months when we had the lockdown, if you continually was able to sustain your expenses and live a comfortable lifestyle, it means to say that you are already prepared for your retirement life because you have transferred already majority of income from active to passive. However, for the first 3 months of the lockdown, you're having a hard time meeting your payments and your bills because there's no income coming in. It means say that you are not yet well prepared. And last but not the least, even you're good in creation, you're good in handling, you're good in growing your money. But if you fail to protect or you fail to protect your money, you know what will happen? All of your hard-earned money will go down the drain. Why? What do I mean? One life-changing event can wipe out your entire savings. What do I mean? Have you known of anyone who got COVID and then check and ask yourself how much was the hospital bills of your friend and your relative when they had COVID? Got hospitalized, some of them even got to ICU. Probably some of you, some of the people that I've learned, they spend $500,000, 1 million, 2 million, even 5 million. So what does it mean? If you don't protect your money, one critical illness can wipe out your investment, your savings, the money that you earn. That's the reason why, again, I'm not here to sell you anything, just to give you a fresh perspective. You need to have the 3 things in life, 3 important things: health insurance, life insurance, and non-life insurance. Health insurance to protect you during the times of medication, life insurance to protect the breadwinner, non-life in order to protect your assets and your property. And on top of that, you should learn also financial planning and estate planning, especially for people who are about to retire and you don't want to worry about your the money that you're going to leave your family. So ultimately, what's the goal in terms of protection? Is to protect and preserve. Again, protect and preserve. Why? If you don't know how to protect and preserve, at the end of your days, majority of your money will go to taxes and to the government. Again, there are 4 things that you and I need to fulfill in order for us to live our life comfortably. Number 1, you should learn how to earn money. Number 2, manage your money. Number 3, grow. And number 4, protect. Thank you very much, Click and Ben.
Jinky, thank you very much for your presentation. And before anything else, happy Chinese New Year to you, my friend. It's been a long time. It's been too long, but I'm glad that we're collaborating on something again.
Yeah, thank you, Dante. It's been a long while. It's really been a while.
Yes, I hope you're doing well. I don't know if you follow Paul Krugman. He writes a column for the New York Times and of course elsewhere. And his last column in the New York Times, and I wanted to ask you this because you mentioned Bitcoins as an investment class. He was warning that, cryptocurrencies may be the new subprime of today's economy. People are excited about it, hoping, I think, or expecting that they will, earn riches from it. But, his worry, and this is something that we've written about also, his worry is that not enough people actually understand what it is, what cryptocurrencies are.
Yes.
So how would you react to that warning? Given all of the hype, right, and excitement, and there are, of course, people investing in cryptocurrencies. Well, how would you react to Paul Krugman's assertion that it's the new subprime?
Yeah, I totally agree with probably his observation. Again, it goes back to my first thing that I warn about people: never get into something that you don't understand, no matter how profitable it may be. It doesn't mean to say that your friend is making some money off cryptocurrency and you're excited about it, and then you have what we call as FOMO, the fear of missing out, and then you jump in. It's just like jumping into a 10-foot pool without learning how to swim. What do you expect? Definitely you will drown. It's just like driving a car without learning how to drive. You will damage the car. So that's number 1. Number 2, talking about the in terms of will the bubble burst? The second thing I always tell people is you should learn first the process of investing before you invest. You should understand what type of an investor are you. Are you a conservative, moderate, or aggressive? Like, for example, when you say aggressive, You are investing on the high, moderate on the middle, and then conservative on the low. As an investor, personally, I'm more on the conservative side. So if I'm on the conservative side, I should not really touch cryptocurrency. Why? Cryptocurrency is on the high side. So if you don't understand what, again, the process of investment, definitely you will invest your hard-earned money. And then that's the reason why a lot of people get burned. And the last but not the least, does it mean say that I should never touch cryptocurrency? You can. But only invest the amount of money you can afford to lose, not borrowed money, not your emergency fund, not your savings. Okay, it's an X amount. Likewise, if you ask me, am I invested? Yes, but I only invested a minimal portion, probably around 2% of my entire portfolio is in crypto. Why? So if ever, just like what happened right now, it dropped by almost 40% from December up to right now. I won't lose sleep on that because I know it's disposable income and it's disposable funds.
Yeah, very interesting. So if I understand you good, don't just jump in, right? So get some information about yourself and the investment itself. On the more conservative side, the Philippines recently came up with, the domestic version of the 401k. They call it the personal equity retirement account. I was wondering what are your thoughts there? Is that a good facility? Are there better ones out there? Maybe you talk about putting money away. How is Pera, and are there some things better?
Yeah, Pera is a good start, no? Pera is really a good start to create the awareness and for people to really stack some money away. The most important thing is for them to develop the habit of saving for investment. And probably another alternative that if you want, it's a proven fact already. Again, I'm not here to endorse them. It's called Pag-ibig. Pag-ibig offers what we call as an MP2 program for as low as 500 pesos. You can already start investing, and based on their past performance over a period of 3 to 5 years, they're averaging from 6 to 8% interest per annum, higher than the bank at least 1% before tax. So at 6 to 8%, I think that's more decent compared to any other form of investments. But only the downside, you have to really keep it there for 5 years, untouchable funds. So if you want to stay for 5 years, yeah, I think that's one of the best alternative aside from Pera.
That's very. I do have some funds in MP2, but I not anything to brag about. But so I'm glad to hear that it's safe for me to increase my investments there. You talk about passive income, and everybody these days, more so because of the pandemic, are going online to either do some coaching or some vlogging. How reliable is that in terms of a passive income? Given your experience, what are the realistic expectations? Because I think everybody wants to be a star, right? But not everybody like you has the actual background to back it up and to have meaningful content. But how reliable is doing something like that as a means of passive income?
Clint, that's a very good question. But we know this, Clint, Ben, and other listeners and watchers right now, in investment as a whole. You invest pennies, you earn pennies. You invest peanuts, you earn peanuts. You invest millions, you earn millions. So for starters, please don't expect that you will become wealthy, you will retire by investing a few thousand pesos. Right? You invest probably 1,000, and then if it goes 100x, it's 100,000. It won't even buy you a house. It won't even buy you a car. And the 100x is really, man, I mean, say that's really crazy. Diba? It won't happen, right? So you just need to understand the goal for you to start investing is for you not to earn, but for you to learn. Is for you to gain experience.
Right.
So once you gain experience, this is the good thing, that one thing that I've learned in my years of creating wealth. Once you learn something, all you need to do is just multiply it 10 times. 10x. So I'm sure, Dante, you understand what I mean. You start with 100 pesos. You multiply it 10 times, it becomes 1,000. So you find something that works at 1,000 pesos. You multiply it 10 times, it becomes 10,000. So at 10,000, you try to focus and it becomes 100,000. Now you have 100,000, you multiply 10 times, it becomes 1,000,000, and the rest will follow. So the problem is this, sometimes we try to catch the latest, the greatest, and we are so focused on money. And this is one thing that I've learned in my 57 years of existence in this world. I don't know if you will agree with this. The more you pursue money, the more money will run away from you. But the more you learn how to create money, money will follow you. So a lot of people want to eat the cake, but only a few people want to learn the process of baking a cake. If you finish the cake, you need more money to buy cakes, but if you know the process of baking a cake, you will never run out of cakes. A lot of people want to earn money, but only a few people want to learn the process of creating money, of investing money, of growing money. They want it quick. They want it fast. Unfortunately, there's no elevator to success. You have to take the stairs.
Well, if there's one thing I disagree with, Chinky, is that I don't think you look 57. In fact, you look younger than I do. One last question before I bring in Ben. You mentioned that it's good to have maybe 6 months to a year of income just as an emergency fund.
Yes.
In terms of liabilities, of exposure, as a rule of thumb, how much debt can I take on as a percentage of my income, my total income stream would be safe, you think? And beyond that, would be considered risky already.
Actually, that's the downfall of most business people, Dante. I've met a lot of people who really lost money because of growing too fast and too soon, over expansion. And when the reversal came, when you say the reversal came, just like what happened to the big companies, I can still remember Uniwide during the time. That's a perfect example. They borrowed heavily over shores because the interest rate was low during that time. However,
and the dollar was low, yeah.
Yeah, the dollar was low, but all of a sudden, I think from 15 to 20 pesos,
it shot
went
up, yeah,
to 50 pesos during that time. So their debt ballooned in doubled already. So again, we have to be very careful. There's a saying that that we have to know how much can we really chew on, and I always tell people, you know your load. I cannot really tell, okay, it's 5%, 10%, 15, 20, or 50%. Just like lifting weights. If you come with me and then let's go weights, and if I tell, okay, Clink, let's start with 200 pounds. I don't think you and I can carry the 200 pounds right now. Probably I can say, can you carry at 5 pounds? Yeah, let's start with 5. So you start with 5%. And then once you learn, okay, 5%, I can carry more load, you go to 10%. From 10%, you go to 15%. So you try to work your muscle. Likewise, in terms of debt accumulation. Again, don't be too bullish. Right now, your cash flow is okay, but always remember this, as an entrepreneur, always expect the best, but prepare for the worst. What's your plan B? What's your plan C? Just in case your business slows down, your cash flow slows down. Do you have an exit already or a plan in order for you to help to save this deal?
Interesting. Ben, I don't want to monopolize the questions here. I'll bring in Ben now to maybe ask the next questions. Ben?
Okay.
Ben, my request, before you start, please be gentle with English because I only brought a sack full of English today.
I think Ben knows some Chinese. Go ahead.
Very little. In terms of food, that's about it. I have a question I think probably pertains to a lot of people, and it was something that Attorney Ben brought up in his presentation too. You talked about bad debt, which is a very good point. Debt that's used to pay off other debts, bills, expenses, and things like that. And in his presentation, he pointed out that about 55% of the loans that people have are for household needs.
Yeah.
we could assume a lot of that is bad debt.
Yes.
And so, as a person who's thinking about, okay, I want to plan, I want to save some money, I want to set some aside for emergencies, I want to find some that I can invest in things, but I don't have enough money to do this from month to month, in order to do all these smart things that I'm learning. So how would you suggest that somebody go about adjusting their, I'm having to say, not me, but I'm just, I'm a person and I have to take out loans to pay, these nagging bills that I haven't covered for a long time. How do you coach somebody to adjust their spending, live within their means? So that they can, that seems to me to be the key to being able to save and find ways to invest and grow your money and everything. Is in the first place, you got to be able to live on what you're making, correct?
Yeah, got it, Ben. Okay, first things first, I just like to share probably whenever I share an idea, I'd like to leave something that you can do it. In order for you to solve a problem, you cannot solve the problem by the fruit cause. You have to solve it with the root cause. Do you agree, Ben?
Mm-hmm. Exactly.
Borrowing money to pay off another debt is solving the fruit. Making more money, earning more money, creating more side income, starting another new opportunity, taking another job, having overtime is just solving the fruit of the problem. Do you also agree?
Right.
So the first question that we need to answer is this: why are we in debt at the first place? Is it because of wrong decisions, wrong choices, bad business decisions in the past? Number two, is it because you are overly generous because the entire barangay and the entire family is dependent on your one source of income? Or is it because you don't have an emergency fund the moment you lose your job, you're in debt already? Or is it because of hospitalization bills? So you got to first determine, for people who are suffering right now some financial stress, alamin mo, you got to know what is the root cause. And I hope that you won't repeat the same mistake and try to solve it on a long term. The second, okay, so right now I learned, okay, the reason why I'm in debt because of the lack of self-discipline. I use my card to spend the money that I do not have. So number two, what do you need to do? Cut off your card. Cut off already the cost. Or if it's really helping so many relatives, you have to tell them that you cannot afford to help them as of this moment. Or is it because I don't have an emergency fund? Oh, so right now, what you need to do is your priority is to save up for your emergency fund. And how can you do that with your small income? This is the trick. Control the things that you can and let go of the things that you cannot. What can you control? Your way of spending. So what do? Decrease your expenses. Right now, practically, let's talk about if you eat out with your entire family pre-COVID, you spend at least 1,000 pesos normally. If you do that every Sunday, that's 4,000 a month. Times 12 months, that's 48,000 pesos in a year. If you're just conscious, instead of eating out 4 times in a month, why don't we do it twice? That's 2,000 times 12, that's 24. 48 to 24, 24,000 you save, right? So listen, if you're listening, and I hope that you will keep this in mind, money not spent is money additionally earned. I will repeat. Money not spent is money additionally earned. You don't have to borrow. You don't have to increase your income as of the moment. All you need to do is just change your lifestyle and you will have some money. And the excess money that you have, what do? You pay off your debt. And then after you have already plugged the holes and changed your lifestyle down to the bare minimum, that's the time you start looking for other income opportunities to increase your income. Don't increase your income without plugging the leak. Because if you have a glass and it's a broken glass, even though how much water you pour inside the glass, it will never be full. It will never be filled because it has cracks. So fix the cracks. Once the cracks are fixed, that's the time you pour more water. That's how you do it, Ben.
Okay. I hope everybody was listening to that, because that's a lot of good advice. Klink already asked a couple of the questions that I had as far as, what, where's a good place, for somebody to start whenever they want to, whenever they want to save up money. But do you have any, what's the term I'm looking for? But do you have any little simple tricks that people could do every day? Just to keep them, rather than, it's hard for a lot of people to think in big terms. So is there a piece of advice you could give somebody that every day, you do this and you will be on the right track? For instance, okay, here's a personal example. I have a little dish over here, and every day I take all my coins out, throw them in that bowl, and by the end of the week, at the end of the month, there's enough there to spend on something or put it away or whatever. Are there little things like that people can do just in their daily life where they don't have to think so big?
Yeah. Got it. Yeah.
You know what I mean?
understand. Yeah, Ben. Just like what you mentioned a moment ago, you can start probably with your loose change. The moment you come home, especially you have changed the coins and the small bills, you can put it inside a jar, or a what they call as an ipon can, we call it here. So you start with that, and you just make it a habit. The goal is just to save probably 10 pesos, 20 pesos. You just save, let's say, 20 pesos a day, and I believe everyone can do that. 20 pesos, that's 30 days, that's 600 a month, times 12 months, that's 7,200 pesos a year. So by saying that, the important thing is this, again, it's not about the savings. It's about developing the habit of savings. And once you open your savings account and your can, and then you will realize, I'm able to save this. It will say that you will have the mentality of, we as Filipinos say, kaya pala. I can do it. For me, before it was impossible, right now I realize it is possible. So again, from 7,200, again, right now, the next goal will not be 7, it will become 14. So again, just like eating an elephant, I always tell people, the best illustration, when you want to eat an elephant, you don't eat an elephant in one sitting, you eat the elephant one bite at a time. And then for some people, probably, you find joy and you find pleasure in probably acquiring new things by adding to cart to your favorite shopping sites. Add to cart ka ng add to cart, you never check out. Okay? But let me encourage you right now, your fulfillment and joy is not to seeing how much you have purchased. Your fulfillment and joy right now is to see how much you have already saved. All you need to do is just switch your way of thinking. I find fulfillment and joy and whenever I buy these new things. No, you find fulfillment and joy whenever you see your bank account and your saving account is growing. You're still going to have the same what we call as drive, at the same time, same satisfaction.
Okay, I have a question, and this one is actually something that kind of pertains to me. When you talk about having your 6 to 12 months of reserve
Living expense, yeah,
and then protecting your money, which with insurance and whatever, can those two things be combined? In other words, can you combine the insurance with your reserve funds? If you're trying to figure things out, it's like, okay, I have this insurance so that I know that if any of these expenses come up, this is going to be covered. So I can count that as part of my reserve.
Yeah. Well, actually, the good thing is this. FYI, again, the 6 to 12 months that I'm referring to are disposable income. You cannot invest it. You cannot buy it because, again, it must be ready for cash. It should serve as your cash flow. That's over and above for your protection and your investment. And you're referring to the investment that you're saying and protection, insurance plus already investment. The good thing is most financial companies right now offer a 2-in-1 program called VUL. It's called Variable Universal Life. Again, I'm not here to promote any company or product. I'm just referring to you the function. It's two-in-one. It has already protection. Plus, it also has investment in financial instrument like UITF and mutual funds. So you don't have to worry about it. As a matter of fact, some companies also offer three-in-one. When you say three-in-one, you have already protection in terms of insurance. You have also investment. Plus, they also give hospitalization and critical illness fund. When you say critical illness fund, just in case you are diagnosed with a critical illness while you are still alive, okay, you need money for post-medication and for the loss of income while you are recovering, the company will already pay you in full and help you to pay for your expenses. Because in normal life insurance, you have to expire in order for you to be able for the family to enjoy. But with critical illness fund, you don't have to expire. That's a good thing about it.
Okay. All right. I think we've got a message here that we should invite our other speakers back, and we'll have a little.
Yeah, Ben. If you're looking for little things to do, maybe you want to pick up that book, The Richest Man in Babylon. The basic message is save 10% of your income, regardless of how much your income is. That's a small way to start. I gave it away as a Christmas gift one time, but apparently you're not on my Christmas list. I'll be sure to include you this year.
That's an old piece of advice. And it was probably one of the first pieces of financial advice I ever got from anybody. It's sometimes that's a little bit difficult, but once you get in the habit of it, you know.
I think that's what Chinky is saying. You just get into a habit of setting something aside. Yeah.
Right. You find out you don't miss it, and then you'll be okay. You know.
Yeah. All right. Well, yeah, we're running out of time, but maybe at this point we can bring back Attorney Ben and Ms. Pia, and then maybe we'll ask all of them to just give us a final message. Ms. Pia, ladies first. Your final thoughts for this morning's event.
Thank you again for inviting me, Klink, and the Manila Times team. I think just on a final note, I'll keep it short and sweet. Credit can be good. Credit can be powerful. And it can be transformed into a reputational asset if used wisely. I think the imperative thing that we all must remember is to be responsible. The important thing is that we all should be responsible so that we can convert credit into a true asset.
Thank you, Ms. Pia. Attorney Baltazar?
Okay, so the message from the CIC is actually fairly straightforward. So nothing we do contradicts, the advice provided by Mr. Chinky, as well as conventional wisdom on how to properly manage your finances. The only difference or the value added we provide is that the CIC provides a framework in which your behavior is now being monitored, logged, consolidated, and can be shared to your lenders and, of course, accessed by the borrower. So we have to have that level of credit consciousness and be aware of it, because if we know that our actions are being counted or being monitored, then that actually means that our good behavior is rewarded and our bad behavior is going to lead to definite negative consequences. So at the end of the day, that's what the credit information system advances. Rational and encourages good behavior on the part of borrowers and lenders. So at the end of the day, we can actually have a more efficient allocation of credit, a more democratized way of accessing credit, and that will benefit everyone in the long run. So thank you, and that's my message.
Exciting times. Thank you. And of course, our last words from Chinky Tan, and again, Happy Chinese New Year to you, my friend. Your final message.
I totally agree with Ma'am Pia that we need to become responsible creditors. That's number one. And you should learn how to use the money in order for you to expand your business. And then for Attorney definitely Baltasar, I totally agree that it's very important for you to really maintain a good credit score, because it's underrated here in the Philippines, but in America and some other countries, that's one of the most important asset. And for us Filipino Chinese, it's called the integrity, sindyong. 'Di ba? Sa Divisoria dati we sign a piece of paper and then we really need to fulfill. And then by the grace of God and up to this very day, I still have that mindset, no, na kailangan bayaran ng utang. And last but not the least, let me encourage every listeners right now, the goal in life is not to achieve financial stability, because a lot of people want to be financially stable. But the reality is this: no one inside this room, including me, can be financially stable. Really? Yes. Because the more we make, the more we spend. Do you all agree? The goal in life, ladies and gentlemen, mga kapwa Pilipino, is not to pursue financial responsibility, but the goal in life is to practice financial responsibility. Whatever you're earning right now, you make it fit, you make it work. Kung hindi mo kayang pagkasyahin ang sweldo mo ngayon, kapatid, huwag ka na mangarap pag lumaki ang income mo, magkakasya. Kasi ikaw pa rin ang hawak, ikaw pa rin gagastos. Diba? If you don't know how to manage your income right now, you will never learn how. If you don't learn how to manage your double-digit income right now, you will never learn how to manage your 6-digit or 7-digit income in the future. It's the same thing. So if you are faithful with a little, you know what will happen? You will also be faithful with much.
All right. I think we have to leave it at that. Ben, I hope you're taking notes, because don't ask me for a raise. I'm only looking after your interests so that you can make sure that you can manage your resources now.
I know that's
Go back to Chinky's argument that,
I know that's not happening, so that's exactly why I'm taking notes. Well, just before we go, I'd like to make a quick shout out to Crown Plaza and Holiday Inn for providing our lunch today. Looking forward to that as soon as I get up from this chair. And of course, we probably could spend all afternoon talking to the three of you, and maybe we can do this again sometime.
yeah. Well, thank you, everyone. Attorney Baltazar, Mr. Aliano, Mr. Tan, thank you very much. And thank you, Ben. And thank you, everyone watching this event today. And see you at the next The Manila Times Forum.
Thank you.
Thank you. Thank you again. Bye-bye. Be safe, everyone.
Bago pa man magsimulang tumigil ang mundo ng dahil sa pandemya, napakadami na namin ginaharap para lang magampanan ang aming tungkulin. Matugunan ang pangangailangan ng nakararami. Simula sa lungkot na dala ng pagsampa, hanggang sa iba't ibang klaseng trabaho na dinaranas namin sa araw-araw. Kalakip ang pangako ng magandang bukas. Patuloy kaming babangon para matugunan ang inyong pangangailangan. Patuloy naming iaalay ang aming oras at kakayahan para mapanatili kayong nakangiti. Patuloy kaming maglalayag sa iba't ibang dako ng mundo upang mapanatiling maayos ang inyong kalagayan. Ilan lang kami sa lipu-lipong manggagawa sa karagatan na nagnanais ng karampatang pagtrato at respeto. Para sa aming napiling larangan, sana sa araw na ito nilaan para sa amin, maisip mo rin kami. Nagmamahal, mga marinong Pilipino.
At Crown Plaza Manila Galleria, guests' safety and well-being is our priority. Having one of the largest pillarless ballrooms in the area, the hotel aims to provide a successful event in safe and clean environment. Whether for business or social gatherings, high level of cleanliness protocols are being adhered to by our dedicated team. As guests enter the hotel, they must undergo body temperature screening and are requested to pass through a sanitizing mat. In addition, sanitizing stations are made available at entrance and exit points of the hotel. Guests are required to fill out a health and travel declaration form prior entering the venue. To reduce physical contact, forms may be accessed and answered through a QR code. hotel has also modified its function room capacity and setup in adherence to the safety guidelines, including a required distance between event guests. The hotel still offers its managed buffet service, but we highly recommend our exclusive plated service for a fine dining experience. Aside from their already impressive audiovisual equipment made available for guest disposal, the hotel now offers various updated and breakthrough equipment and devices to address requirements in the new normal, striking for success in events and social gatherings. Enhanced food handling measures are also being practiced. Well-thought-out menu prepared by trained kitchen staff wearing face guards, gloves, and caps are packed into bentos and are being served to event attendees and guests. Mabuhay and welcome to Crown Plaza.